Hello everybody and welcome along to another Renko trading video. This time I'm looking at yesterday from 8 AM UK time through till 3. Yesterday was the 2nd of January, so it's not an ideal trading day. I trade Renko, for anyone that doesn't know, and I don't use indicators, I just use pure structure. And I use structure to make the decisions as to whether I'm going to go long or short. With this strategy, you can have loads of trades every day. You get a relatively high win rate. You get some losers, but you get a relatively high win rate, and you would usually profit pretty well each day if you follow my rules. The reason I trade Renko is because it makes looking at structure really simple in comparison to trading normal candlestick charts. Before I get started, I use CTrader. It's got native Renko, which works really well. I know you can use Renko blocks on TradingView, but I don't use those. If anyone does and they've got some settings that work for them, please put it down below in the comments, because a lot of people do ask me about TradingView. I just don't trade it. I much prefer CTrader. I use gold. I only trade gold, and I trade on the 50 block. It moves fast enough for me, but you know, you could use a bigger block if you don't want to be sat at your charts all day, or you could even use a smaller block if you want it to be in and out even quicker. Choose what works for you. The 50 block on IC markets. Some brokers have it as the 5 block. Some have it as the 50 block. Which is nice and confusing. So anyway, before I start, I thought I would put all the trades in beforehand, the winners and the losers, that I can identify. That way I'm not looking for them as I'm doing the video. It makes it a little bit easier for me. I've got a couple of lines here. I don't normally have these on, but these are literally just to show you where the highs and the lows are that I can see, and the reasons why I'm taking the trades. So you can follow along with me as we look at the structure. So 8 o'clock, market opens around about here. So we've got a low there, and we've got a high here that gets broken. That gets then broken again just after 8 o'clock. I would enter a trade here. Which low is responsible for this break of structure? Well, it's this low here. As you can see, it comes down, and then that leg breaks through this high here. Therefore, that's our low. Put our stop loss 1 brick below, and we target a 1-to-1. Coming to draw down a bit, but it wins, which is nice. When I'm in a trade, I do not enter another trade until this one is done. I don't even look at structure when a trade is going. I just leave it. So what happens here? We break up higher. At this point, as you can see, I would wait until... Well, I mean, you could enter here. I entered on this block here. Where is our low? Okay, so there's a bit of an argument here. Someone might say, well, our low is here because we come down 1 block and then we break higher. And that's true for the most part. And it would win, you know, that trade. It would be a nice short trade. It would win. But I like to play it a little bit safer. So because it's so near the entry point, I would put the stop at this low here, which I did do, 1-to-1, and it goes on and wins. We go higher, we come down, we go up, we don't break the high, so our low is still, well, I guess it's still down here. In theory, it's there really now. And that's our high. We come down, we go up, we don't break any highs, so it stays the same. We come down, we break the low here. So we could enter a short here. We've got our stop loss, which is all the way up here, because this is the high that broke the low. This is the leg, as you can see, that broke this low here. So our stop loss would be 1 brick above that. 1-to-1. It's a big area. This is a big trade, as you can see. So what you can do in these, because as you can see it did lose, but what I would do in these situations where price is messing around for a long time and it's a big old area, is you could wait, see price is coming up a little bit, and then it breaks this low here. Can you see that, how it's breaking? Let me just move that down. That's the low there. Can you see how it breaks this low here? And the leg that breaks it is this down here. You could bring your stop loss down here at that point, and you would get stopped out here. That's probably how I would play it, just to take a bit of risk off the table. Now, where are we? So at that point, that's our high. Our low is down. Where is our low? That's our low. That's our high. As you can see, we're sort of messing around a little bit, and then we break that high at this point here. Can you see? Just there. And what leg breaks that? Well, it's this one really. So we'd enter along and we'd be straight out. So I told you, it doesn't win all the time. It's 2 losses there. We're back in. We've dropped a little bit lower here, as you can see. A little bit lower here. That's our low down there. We come back up. We don't break any lower. We come up. We break our high here. So we enter along. Whereas our stop loss will be at the low of this brick here. And we target a 1-to-1. That would win. And then up we go to this point here. That's still our low. We come down. We come up. We don't break anything. So this is irrelevant. That's still our low. We break again here. This point here. What area drove this? I might have got this wrong, because I think it's actually this one here, not this brick, because this brick here, or this low here, causes the break of structure. So this, let's just see what happens. Do we still lose? We do, just. Yeah, so it's still a loss, but not to worry. So we lose another trade, and then we come down. It's very boring, isn't it? It's very, very boring, but I hope you're following along. We break structure here. Oh, don't want to be messing around with these too much. We break structure at this point here. So in theory, we should actually be entering here for a... Well, let's just follow along. That's our low. That's our high. We break that low there. Put the stop at the high. And that goes on to win, as you can see. Nice win. Nice big trade, that. Price comes lower. Down here, as you can see. Probably wouldn't enter straight here, because you like to wait, see what happens. Enter off this break here. Stop would be above there, as you can see. That's the high that drove down. That's a loss. We break structure here. Stop loss would be probably here. Goes on to win. There's our high. There's our low. Break that high again there, so we could enter along. There's our low. 1-to-1. Goes on to win. Comes down. Let's get our high up at the top. That would be our low there. Breaks through that. That's our high up at the top. That's our low. 1-to-1. Goes on to win. That breaks that low. So with like that, that breaks it there. As you can see, breaks it there. Breaks it down there. Now our high would be, well, probably there to start with. You could probably take it here, to be honest. Stop above the high, 1-to-1. Doesn't matter really where you take it. I think that is probably where you should take it. That goes on to win. We carry on further down. You could take a trade here. It'd win, but I waited for it to come up. Break down again, which it did here. That would be our stop, 1-to-1. That would win. We come up, and I'm forgetting to do these, aren't I? There's the low. There's the high. We break the high there. That's a loss. Pretty big loss. That's our high. That's our low down there. We break the low at this point here, as you can see. because we break the low, that then becomes our high. We get a win, 1 to 1. Our low now is here. Our high is here. As you can see, we break it again. So therefore our high is here and our low is there, and we go in for a 1 to 1 and we lose again. Lost a few. This one breaks. That's our high. That's our low. We don't break, we break it here. So therefore that actually becomes our low. And we go in for a 1 to 1 and it wins, and we go up, we come down, we go up. We don't break anything. We just put that will be the low that's driven that high. We come down here, we break this low here. So where's our high? Well, it's all the way still up here. Well, actually, it would probably be there. Actually, that would be the high. So let me just adjust this. Not that it makes much difference because it still wins. But that actually would be the high there. That would go on to win. We come down, we go up. We don't break the low, which is down here. The high would be there at that point. So yeah, actually would be the high. We would go in there because we break that high. Our low is there. So I just need to tighten this up a little bit. Probably be more like that. That goes on to win. So where's our high now? Our high is here. Our low is here, because look, we actually break the high there. Oh no, but I wouldn't go into that because I don't go straight away. I wait and see what happens. So that's fair enough. We wouldn't go into that trade. We come down. That actually would be the high there, and that would be the low. We break that low, as you can see here. 1 to 1 goes on to win. That's the low. We break that low. That's the high. We'd still be in a trade, so we wouldn't. That would win though if you took it, but we're still in a trade, so we wouldn't take that. Price comes down, comes up. That's our low. Our high. As soon as that low is broken, would therefore be here. We take a trade there. That goes on to win. We come down. We go down. We go up. We go down. We take another trade because look, this is our low here, and we break through it. Where's our high? Our high is up here. Goes on to win. We go down, we come up. That's our low. That's our high. No, actually, that's our high. We break the high there. We go long. It's a loss. Still loads more trades. Just happen continuously. We come down, as you can see. We could wait. We come down. We come up. We then break here, which is our low. Our high is there for this one here. This candle here, or Renko block here, goes on to win. We come down, we go down, blah blah blah. This is a loss, and so on and so forth. I keep talking about it, but it's quite difficult to get your head around, I think, to begin with. But if you keep practicing, you'll see that they all follow the same rules. Let's count them up, right? So we got a 1R, 2R. I'm going to count that as a full loss. So that's 1R. So 1R, 2R, 1R. Break even. 1R. Break even. 1R. Break even. 1R, 2R, 3R, 4R, 5R, 4R, 5R, 4R, 5R, 6R, 7R, 8R, 9R, 10R, 9R, 10R, 9R, 8R, 7R, 8R, 9R, 8R, 9R. So there you go, that's 9R. If you're risking 1%, that's 9% in a day. If you're risking 2%, that's 18%. If you're risking 3%, that's 27%. So it really does work. And that is on Friday, the 2nd of January, which is quite possibly the worst, one of the worst days you can trade. I've decided as well, because a lot of people do seem to quite like these videos, and I appreciate that it's quite difficult to get your head around. I'm going to start a free Telegram group. It's completely free, and it's in the description. There's nobody in it at the minute, so there might just be a handful of us. but I will be trading this, and I will be able to answer questions that you may or may not have if you want to have a play at using this strategy. So click the link in the description to join. It's completely free. I'm not one of these people. I'm not going to say give me £1,000 and there's none of that. It's just we can share ideas and stuff. So just click the link in the description. Hopefully this has been of use. Share it, like it, do all that kind of stuff. Subscribe. It helps the channel, and I'll see you on the next video. Bye for now.